Let's talk about buying a building. Wayne Williams is the Senior Vice President for the Business Finance Group. Please welcome Wayne.
I was thinking as we were talking, the last panel was up, it was a very nice segue into buying property. So, and I would just like to mention, for those panelists who have been here today and you haven't actually been on this panel before, I hope you don't have friends like I do who will call you at 2 a.m. because they see you on Channel 16 and they want to let you know that you were on TV 20 times. So enjoy that, and I do very much appreciate the opportunity to come talk with you. I want to talk with you about buying property. Yes. I represent a federal loan program that's administered through the Small Business Administration that has been outsourced to community-based nonprofit organizations. And I happen to be one of 260 companies around the country that run this loan program for the Small Business Administration. I run it here in Washington, D.C. Why do clients buy buildings? Some of these things that you guys already know about. Secure a location. For a retailer, it is critical to make sure that your clients know how to find you. And that when you're leasing property, and as we've heard from panelists already this morning, who are constantly having to jockey locations because leases are going up, buildings are being torn down, and it's just critical for clients to be able to find you and know where you're going to be and hopefully be long term. There are also the financial reasons, which we've talked about. Several of the panelists have talked about lease rates increasing and being priced out of buildings as those lease rates continue to climb. And then also, because of the city and a lot of the things that the city is doing, there are some tax benefits to you if you buy in certain areas of the city. Those can be anything from tax credits to employment tax credits if you're employing people who actually reside here in D.C. So that can also factor into your decision about buying property. And then the personal reasons. A lot of people have talked about how they are sinking their life savings from their equity in their home into their business. This can also be a way for you to grow equity in commercial property and then cash that out at some point down the road. The 504 program. This is the program, and it's named after the section of the code of the Code of Federal Regulation that it's administered under with the Small Business Administration. Again, I'd just like to mention, for those of you that might be familiar with the Small Business Administration, and I'd like to draw a comparison. This is not the SBA loan programs that people think about when they normally think about SBA. Those programs have been around since the 1950s. This program was created in the early 80s and was outsourced to community-based nonprofits, and it was done purposely by Congress to make sure there was a community impact and local economic development flavor to this loan program, and it's all about buying property. The other program is available for any multitude of business uses. This one is just about buying commercial property. And we're measured a little bit differently because we are measured by, unlike a bank that administers the other loan program for SBA, we're measured by the number of jobs that our business borrowers are creating or retaining in a local community and the way you're reinvesting your money into growing the tax base of that local community. So again, a little different spin on commercial finance. I give you our sample loan project. This is, if you were going to be spending $1 million to buy property, our average loan size is about $1.3 million, and we are doing projects in every ward of the city. There are some focus areas right now where we're doing a lot of activity. 8th Street Northeast being one of those areas we're financing. We've got 4 projects under development there now, and Georgia Avenue as well. This is a sample project. If you're going to spend $1 million, we do split this. This loan program is a shared program. We separate the first 50% to a bank partner, and we work with every bank in town, your bank or a bank that you would like to work with. The bank gets the first mortgage on the property. We come in, and our program takes the second 40% of the project, or up to 40% of the project, and we offer a 20-year fully amortizing loan on that 40% piece. The rate and terms that you negotiate with the bank partner are up to you on that first 50% piece. We do have some regulations and restrictions on the bank partner. They must give you at least 10 years before they call your loan or balloon your loan, and they have to have a very reasonable interest rate, which that's governed by federal regulation as well. And then the client actually does have to contribute 10% down, and that's just one of the challenging things about the program, is where to come up with that 10% down. I've got a couple of slides that will talk about that. I should have mentioned that as a community-based nonprofit, I'm not a bank, so I don't have the ability to write a check to you when you go to closing to fund that 40% piece. How we're able to do that, the companies just like mine around the country take all of our closed loans on a monthly basis, and we underwrite and securitize mortgage-backed securities with Merrill Lynch in New York. And the federal government, through SBA, lays the guarantee of the federal government on that bond issue, which makes it almost like a treasury note for investor purposes. And we sell our product mostly to life insurance companies. And that's how we're able to actually get the funding for the program to fund that 40% piece. The great thing for you is, as a borrower with our program, you get a great interest rate. And you can see our current interest rate, 6.116, and that was our March bond sale. We actually are selling bonds through Merrill Lynch to fund the program. And that compares right now to commercial bank financing. That's somewhere in the neighborhood of 7.5 on a short-term fixed rate, maybe 5 to 7 years. Ours is a fully amortized 20-year loan at 6.1. Again, that compares almost really well with residential mortgage financing. Couple of misperceptions about the Small Business Administration, and particularly this loan program. It's not costly. There are some fees. We do roll those into the financing, so you absorb them through the financing and the loan. So we do fund those. So when we're looking at that 10% down as a true 10% to you, and we're funding everything else. Paperwork, same kind of paperwork you would have at any kind of business loan application. I have a website that you can go to, businessfinancegroup.org, and you'll find all of the information about what we require in a loan application. But again, it's the same thing that you would have with any commercial bank application. There's no SBA intrusion into your business operations. That's a common myth with the SBA. We want to make sure that the business owner has the ability to continue to operate the business successfully to repay the debt, so we leave that up to the business owner. And our process is not very time-consuming, another myth with SBA, particularly because this program is outsourced to community-based nonprofits. This is all we do, this one loan program. And we are the 10th largest company like this in the nation, so our process is fairly expedited. We can process a loan in as little as 15 business days. So how do you find a bank for the 50% piece? I alluded to this previously. We work with every bank in town, so we can make that easy for you. If you don't have an established banking relationship, we can help you identify banks that are more likely to approve your loan based on what type of business you are or what geographical area you're in. There are businesses that are focused on D.C. There are banks that are focused on financing businesses in D.C. There are banks that don't like certain segments, restaurants we've mentioned, that are very difficult to finance, but there are banks that actually like restaurants, so we can help meander through that for you. And again, because the bank only ends up with 50% of the project and a first mortgage on the building that we're looking at, banks are pretty competitive, and they're calling me daily looking for opportunities to do financing and partnering with us.